about that kind of stuff. He's like, but they've been told they need to pick up a certain number of shares of this company, so
Right.
they've got to get it at the cheapest price they can, and so that's what drives the prices. They're buying it there and down at the bottom, like where it finds support and wicks up. They're like, well, that's support, so I'm going to buy there because that's the lowest price I see.
Right.
Really interesting. Really interesting. It actually went into not so much what they think of retail traders, but the differences in mindset.
Right. Yeah, they're just trading where they see support and resistance. That's what drives a lot of the price action, and then retail chases it. Retail's trying to ride the coattails,
Yeah, exactly.
and as long as the retail traders can keep their emotions out of it, they can do well to follow in the coattails. And what we know about price action makes us more in the same realm as the institutional trader, as we know how to keep our emotions shut down. If we want in on a price, we know where the price is likely to pull back to. We can grab it. That was pretty much textbook right there.
Yeah, Stone and I were conversing on that like a week ago, and I was talking about intuition. He's like, "Well, emotions and all that shouldn't come in." I sat and thought about that, and I was like, "Do I? I mean, for me, intuition is not so much of an emotional thing. It's more my lizard brain. I'm letting my subconscious do the thinking for me.
Right. And
Well, I just try to look at the chart and go ahead. What were you saying?
as I say, in that sense, it's not so much that you're waiting for the right emotion to come to light. It's
Yeah,
you're watching what everybody else's emotions are doing.
yeah, exactly. Uh, Watching the argument,
Right.
as you said. Um, the interesting thing is the other thing I added on to that was that that intuition is trained. It's a trained intuition. It's from watching the chart, watching certain products enough. And we brought this up in conversation, I don't know, a month or two ago. You know, the seasons of the year, essentially what's going to happen in these areas anyways, because you've seen it before.
Right.
And it comes from watching a product long enough to know and understand how it's going to react, and then that intuition kicks in.
Exactly. And it's just a matter of being able to take a rational position and just observe from the outside and kind of ra- uh, take the irrationality out of the equation and just say, hey, this is the logical next step for solving this argument. And you're literally watching an argument between bulls and bears. You're watching two people argue, essentially, when you see a chart, or two groups of people arguing. And all you got to do is say, okay, well, where do I think these guys are going to come to this conclusion? Where do I think these guys are going to come to that conclusion? That's essentially what you're seeing. So yeah, you can literally just pay attention to how these people are feeling about each other and know exactly where the argument's going to fail for one side and prevail for the other side. All right, here's two breaks. Look at this TCDA, classic. Pull back
Third
to
beat.
the level of two, bam. Now, bulls who bought here, this is where they're taking profit, right in this range here. That's what's causing those wicks. So if we don't,
Licking their wounds, trying to make up for the losses.
exactly, and if we don't get a bar here back to 27 cents, this will break down and probably test its opening range low, which is about 22 cents. That's something to know on those. And then this KAL, this looks like a bearish engulfing, but let that candle close. Don't let this fool you. We're out of a wedge. This is where a lot of times retail will go and chase this. And sure enough, this is where short sellers will take over for a moment. They're going to short that gap. They've covered it right here. And this is where you're going to watch for the bulls to pick up the ball. And SPY finally breaking that channel. Look at this. Typical 1, 2, 3 knocks on resistance. Bam. 50% is right here at $400.20. Learn this to trade this. That's what we're doing here.
I mean, heck, learn it all. That's why we've got them
Absolutely.
both up. That's why we got
Absolutely.
both of them up, right?
Yes, sir. I'm going to put Tesla on the map here. Sega's alerting a breakout. There it is, measured move, plain as day. Leg, consolidate, leg. Expect about 188. And it's like amazing how you can just literally glance at a chart and know where the price levels are likely to be. Just at a glance. It doesn't take long to get to that level.
No, once you get comfortable marking out your levels and marking up your chart. I mean, it's like you say, understanding where to draw lines is one thing, because any idiot can draw a line.
Right. Just knowing what they are
So
and what they mean.
And where are those, Jeremy?
Those are actually in two zones. We had this angular resistance on Tesla for a while now, and it broke it today. And this is where, where did I come up with that? Hang on. Oh, that's right. That's the base. Weird. Okay. Weibull has skewed my lines again, but this is the channel bottom of that descending channel. But if you look at it on a 2 hour, it's in a completely different place. But if we break above $200 on Tesla, the regression line's all the way up here at about 224. Might take a while to get there because it's going to be choppy. It's basically going to repeat this price action down here, likely, and then break. But descending channels, as bearish as they look for a while, they do eventually break bullish, typically.
Well, just because they need to. You need to have a reprieve after a big move.
Right, it's just releasing tension, so to speak.
50% retracement is blowing off steam.
That's it. And knowing how to visualize a measured move on a chart like that just by glancing at it is, like I said, it becomes an art. You know where this range is, you know where the accumulation happened, and you know where the extensions are. And then always know that there's two parts to most legs. Like you can see there's a little accumulation here, and it bounced off the 8 period. Well, that sets up a zone that is likely to be about range for a half leg, which is right up here at about 185.80. And then let's draw one more line in this. Where was I? There. So if Tesla were to pull back suddenly, we're going to know where it's likely to accumulate to. But I usually draw this line in a segment because I can drag it around on the control candles within that accumulation.
Mm-hmm.
And I can kind of know about where the leg is likely to be. Stone would usually use a shadow box to do this. He would take and put a shadow box here and a shadow box here and then drag it over here to measure where we can expect the legs to be. I just draw lines.
Interesting how different techniques breed the same results.
That's right. And if you take and measure the distance from here to here, if accumulation support is here, that puts our measured move up to about 187. There we go, KAL.
KAL fake out STB? Nope, there it is.
It's going to touch the gap target about 12.2. So it actually was a third flag. So we got 1, 2, 3, break down to 2. Is possible, or sometimes when you get a really tight wedge like this, where it's a little bit longer duration than the previous flags, you'll get what they do is they do that little speed bump that Scott used to talk about. They'll go and stop hunt right at the end of this. And this is a move that usually would be made by institutional traders if they were interested in this, and probably not at this price, but there's certain parameters they trade where they don't mess around. But if some whale wants to buy a sizable chunk of this company, that's exactly what those guys will do. They'll go and try to get it as cheap as they can. They have a certain number of shares they're supposed to accumulate, just like you were talking about earlier, and they'll go and stop hunt all the time. It's just like when I'm looking at the ES and you can see where all the levels are stacking up, all the orders are stacking up, where you get those little bars that stick out in the volume profile, or the day volume profile. Institutional traders have that same information right on pretty much any stock they want to see. So they know about where all the orders are waiting to get in. And they also know where the stops are.
Yeah, they know where it's what they were talking about in that was they generally have they have information telling them where most of it is accumulating. I'm guessing. I think that's what they were essentially saying, that they know essentially generally where the stops are accumulating.
Right. And if they are in a penny stock, and it's pretty rare, but they do trade penny stocks as well now and then when they have a big enough buyer wanting to accumulate a big position in a company, or sometimes the insiders will put the order through to a brokerage and have the brokerage handle it for insider buying as well. And the idea is they're going to look at certain key places for support and resistance, just like we do. But the other thing they're going to look for is kind of odd. Look for round numbers. Look for,
Yep.
And it doesn't necessarily have to be odds and evens either. It's typically going to be like 5/10 of a cent or 5 cents or 50 cents or whatever the heck will come in. They love fives. If you look at the ES, like you'll see every $5 there's a bar that sticks out for where the orders stack up. And kind of the same habit for pretty much anything they're going to trade, including SPY. So like SPY, they'll look for like 25-cent intervals typically. Before, when the market was kind of melting up slowly and that long bull market, SPY would trade in quarters. Pretty much every time you spot a pivot, it would be on a quarter, like 25 cents here, 50 cents there, 75 cents there, whatever. And occasionally on days where you get volatility during that long-term bull market, you'd see whole dollar moves. And that's what I was able to train myself on trading for a long time. Pretty easy for anybody to figure that out. In a bull market, anybody can make money. You just got to kind of buy the pullbacks, buy the dips, and sell the rips. In a bear market, it's a different story. You'll get kind of harder to predict price action, but a lot more volatility. And that's where those diamond patterns kind of started to really stand out. You start looking at those diamond patterns and you realize, hey, we can find trend lines with that. And when we find those trend lines, we can find price targets. And they may be in whole dollars. Sometimes they'll be in half dollars, but most of the time they'll be in whole dollars. And occasionally in $5. So when I started drawing this guy down here, that's what we came to realize, is that we were looking at really big ranges for price target potential. And when we started realizing this sort of stuff back before Jackson Hole, when we started realizing the diamond was a prominent pattern in this bear market, we were able to predict the entire range of Jackson Hole. We were able to predict the entire range of CPI and know exactly where the key resistance and key support area is in. Even in like a $10, $15 range, it was easy to see. That was the whole art of spotting and trading the diamond pattern. Well, now we're kind of slowly kind of wriggling out of this market where we've got the potential to become a bull market again. But the market has been hesitant because there's still a lot of things in play as far as headwinds in the market go. But we know about where that diamond pattern happened. We're in, whoops, I just messed up one of my lines. we're in that angular support range. And we've got the potential to break out at some point. But until then, we've got to trade by the rules and look for other trend lines. And I'm going to see if I can find one right now. We could be in a regression, or this actually kind of forms a wolf wave right here. We got 1, 2, 3, 4. Kind of draw that up this way. And I love making my wolf waves purple. Now let's take it down. There it is. And let's see, there was a diamond here. That one's out of play. This one's in play. I don't like the reach on this one though. Does set up this line here though. And what I'm getting at with drawing all this noise on my chart is once you realize what you're looking for angular resistance and support trend lines in general, and when you build them off of a known pattern that seems to be very predictable, the next step is to decide how much time you have to actually draw those lines to be able to trade it. And in this case, we're drawing it on daily charts and 2-hour charts and 30-minute charts and so forth. Well, when we're day trading, we don't always have time to draw lines during high volatility. So leaving those long-term lines on your chart gives you price targets for long range if there's enough volatility to reach from A to B or between those two really wide gaps. So putting those on your chart is important. And we have a partnership with a charting platform that does all that for you. I'm going to talk to them about seeing if they can identify diamond patterns for us and set them up so that we can pick them out. You can take and add them yourself, or you can take existing known trend lines, double click on them and set them off. And I'm talking about TrendSpider. And one of the great things about it is it takes a lot of the time that you have to invest in putting these lines in your chart and has them automatically for you right down to a 1-minute chart and even a 10-second chart if you'd like. It just makes it so that you can find these things easier. You don't really have to waste a lot of time with them, and when the chart's being volatile and you've got good price action to trade, it'll pull it off so quickly and automatically that you can just see it. And I'm going to put on my display here in a moment. Put my password in and log in. There we go. All right, I'm going to drag it over my entire screen here so we can kind of see where we're playing out. I'm going to block off a bunch of stuff in doing so, but just to give a demonstration. And I'm going to have a rep come on at some point this week, maybe next week, to explain how to use this software and how to manage your time involved in drawing trend lines. Let's go out to a 2-hour.
Good morning, guys.
Morning.
Morning.
How you doing today? Oops.
I'm doing good. How are you guys?
A little better by the minute, as I say. Or as I always say.
What is this platform you're showing on your screen?
So this is TrendSpider, and we've
Okay.
got a pretty good affiliate deal with them. for discounts, and then I'm going to have a rep come on either this week or next week to explain a little bit more about how to use it, more than I know about how to use it. Obviously, they wrote the program. So I'm going to take and show you. You can see that diamond here that I drew out on SPY with your mind's eye, but you see there's no upper line here on their platform. However, it does exist right over here. That guy, I keep getting it. That one. And if you double click on their lines, it'll solidify them so that they stand out, and then you can drag them into any time frame you want, and they will hold true. But effectively, what it does is it takes all that work that you see me doing, drawing lines, and does it automatically for you. I use TrendSpider to backtest all the lines that I draw to kind of see what's being paid attention to and what's being ignored. But knowing it's there is half the battle. And then the other idea is, if you're a newer trader and you're not used to being able to identify trend lines very easily, this will give you an automatic platform that does it for you. And then the idea for you is to learn why they're relevant and learn how to draw them yourself by using a software platform that does it for you.
So you just use this to practice. You still have to apply it to your brokerage account or whatever you're doing to do your charting, yeah?
Right. And then ideally, if there's something that you see on this platform that you didn't recognize, it'll really help you get an idea of where to look and what to look for. I'm just kind of picking out a narrowing rising wedge here that I just noticed that I didn't have. This diamond's cool, but we've got a narrowing rising wedge here, and these tend to come to a point and then break somewhere. So I'm going to pick off all the relevant lines in there, and then also I have the day volume profile on the chart here, which is useful.
Sorry, I missed the beginning of this, Jeremy. Do you just apply it to a chart and it will tell you what trends appear to be present, yeah?
Right. So it's just,
Okay.
it just draws all the lines. And essentially you can go into a lot more detail with this too. Let me see here. I had... Oh, there's an update. Darn it. There's chart patterns you can look for too. Point of control is highlighted right here when I clicked on that, by the way. No, that was always there. Okay, here's your point of control. That's also important. So current point of control is going to change with every time frame, but you look at what we usually look for control bars or accumulation zones in previous trends. That's where you look for that center point of, or that balance of point of control that you're looking for. That's important to pay attention to as well. At one point I had the ability to show more lines and I can't figure out where that went. They updated it. I'll go to a 5-minute. I think I have it set to showing all the lines, but you can have different levels of how many lines you want it to draw for you. And in most cases you can find a lot of trend lines you didn't notice before when you do that. There's a range right there. Okay. And the only thing missing here is a regression line, but it's close. And there's that that breakdown we were expecting from SPY right there. Nice. All right, let me drag this off for a second. And let's see here. This was about the same point of control that we have here.
Oh, damn. Broke too soon.
And we saw that point of control right at $400. TrendSpider has it at like $399.80, so it'll round it to the nearest 10 cents. It looks like for point of control, but we knew about where it was. That's this guy here. And to find that point of control, I was able to look at more recent price action and know where that pivot was. But you start looking left, it lines up just above that accumulation zone that we were noticing. Kind of interesting. We are bears. Right down to probably about 398.50 is where we're going with this. But yeah, TrendSpider is awesome. It's very cost effective. It's not too much of a subscription fee on there, and we've got a really good affiliate deal with them. So I'm in communication with one of their high ups. Let me see. I'm trying to dig up my email. Good Lord, I've had a lot of email come through. Sorry.
Don't drown.
No kidding. TrendSpider, there we go. Value add proposition, here we go. And David Yoakum, he's the guy. Da-da-da-da. All right, let me see if I can maybe set this up for nailing down a day this week that we can do it. If not, we'll get into it next week, but definitely a fine platform to have. It's just me, or is the skewing effect on my trend lines for Webull getting worse? This is my purple wolf right here. And here it is way above current price on a 2-hour chart.
That's horrific.
The weird thing is that price reacts to it when it is on skew. Like you can see this control bar right here.
No, it like kind of got below that and slammed below it. Like,
That is so neat, though. I don't know why it skews like that, but when it does, I always pay attention to where the lines are because it's still relevant for some reason. I don't get why, but very cool nonetheless. All right, so this was previous angular resistance for our descending channel. We had our clean 50% retracement. That was actually skewed just a little bit. Now we're meeting that angular resistance as angular support now. And we're right in the base of a control bar right here from our open. So there's a pivot there. Although a short-term one is the 399 pivot. It's just some really cool software to have on hand, especially if you're starting out and you're not quite sure about what to draw, where to draw it, and why to pay attention to it. There's another line I wanted to add right here. Okay, let me drag the TrendSpider lines back out here. And go to a 5-minute. There we are, right in range. Right with the wick even. That just goes to show you, I mean, there is software that does it all for you. And man, it makes it real easy to pick them out. And you don't have to spend so much time drawing them. If you're trading a 1 and 5 minute chart, you don't always have time to draw these lines.
That's really nice.
And I know there's a lot more to this software that I don't know. I've been playing with it here and there. Mainly, like I say, I use it to back test my lines. But if you were to get involved in this software as a newer trader or someone who's not quite sure where to draw these lines, this would be very useful to know how to use it in depth. And I believe there is a way that you can connect it to some trading platforms and have it work as an API to not necessarily trade on your platform, but to overlay all the lines onto your platform. I think there's a way to do that, or a way to integrate it at least. But I've got a few monitors on hand, so I can just drag this off to a different monitor and pay attention to one while I'm trading the other.
Yeah, I was going to ask about that. If you're using different software, different platforms, say you're using one for price action, but your brokers are on another platform, is it still possible to use the chart for, say, price action, microsecond, whatever, and then use a different screen with a different broker on a different platform to do the buying and selling, or should they be connected?
I do that all the time, actually. Like when you're seeing me trade the ES, when I was using Tradovate, and I'll be using TradeStation next. I was watching the 1 and 5 minute on SPY, and I was able to correlate a lot more efficiently what the longer term setups are using a different platform to chart it, because the way Tradovate charts worked on that level, that 1 and 5 minute, was a little bit, I wouldn't say inaccurate, but it was just a little bit harder to trace out everything. Whereas Webull gave me an opportunity to draw much cleaner lines. It had much better looking candles, and it was just a little bit easier for me to track that. So yes, it is absolutely possible to be watching multiple platforms and trading on one.
Thanks, Jeremy. Thanks for confirming.
No problem.
You don't owe any brand your allegiance.
Nope.
Oh, I don't worry. I've already got about 4 different platforms, but I'm trying to sort of work out the best way to chart, watch price action, and trade all at the same time, and get all my different monitors set up.
Right.
Good for you. That's awesome.
It's all about the number of monitors, isn't it?
More
It kind of is
monitors.
for me. I don't have enough. I need 6. I have 3.
Yeah, I'm trying to aim for 6 now. I just nicked the load from work.
There you go.
I won't tell if you won't.
No, don't worry. They were getting rid of them anyway. They were
Yep.
old monitors,
Oh,
Yeah,
good.
When they process them out like that.
Yeah, and I got a hub as well, so I should be able to connect them and sync them.
I've actually accumulated a lot of old equipment from different jobs I've worked over the years, and just stuff they were getting rid of. I'm like, oh, I can make use of that. One man's junk is another man's treasure. Sure.
That's right, isn't it?
My buddy works for HP. He got a curve for free because they were chucking it.
Nice.
Oh, what?
Gotta love that. Got kind of an hourglass here on this KAL. This will be interesting. The point of control is currently 13 cents. This will either break out or break down pretty much on that 13 cent pivot. That's got potential, man. This thing could really move. It's one of those. Got lots and lots of control levels to the left. Coming out of a tight daily pinch. 2-hour pinch is released. Now it's coming back together. This will likely accumulate a little bit more in this area before it does break out. But this can be both a day trading chart and a swing trading chart. Similar to what we did with comms. Great practice if you wanted to do that 1-share, 2-share thing with your platform, just to practice trading patterns and trading breakouts and price action in general. That is a great candidate. Lots and lots of price action on that one. All right, I'm going to go look back at a couple others here. I'll use my phone. HLBZ did some fun stuff. And you can use TrendSpider for penny stocks as well. In fact, let me drag it over. It's hard to see the stuff that you want to see on a compressed chart. Just like when I draw a lot of lines on my chart, you can't see the forest through the trees. But man, it makes trading pennies easy. So there's that point of control for that one, 28 cents. Love it. This is awesome. There's got to be a way to They updated it, and I don't know. There used to be a heading up here that said more lines, less lines, or just the important lines. And it's gone now. It must have moved somewhere. This thing has a ton of tools, man. There's your shadow box drawing tool. One of these days I got to go through more of the software, and I think that's what we're going to do is once we get on with these guys, we're going to record all this and have a record of how to use every aspect of this software all in one place. But it is pretty damn awesome. I do love it. Back to Spy. So this is what that chart pattern setting does for you. It'll find wedges and it'll define where the angular resistance is outside of the noise. And
How much is this a month, Jeremy?
I'll have to find out exactly how much. I know it's pretty reasonable though. Let me see here. TrendSpider. Go to the website. I don't know offhand. I'm going to have to find out. I know we get a really good discount on it.
No worries, we'll get around to that when I set everything up.
Gosh, I feel like an idiot now. I don't know. Plans and pricing. Here we go. They have 3 different tiers. They have Advanced, Elite, and Premium. And let's see, Premium service is at $18.50 a month, and I know we get a little discount off of that. Elite is $32.50 a month, and Advanced is $38.80 a month. But I know we get pretty good deals on that, and also they do have a 7-day free trial too. So. Oh, it's Cyber Monday. That's why. Okay, so ordinarily these are a lot more. The premium's usually $33. It's currently on Cyber Monday special, 45% off. Here's what I'm seeing here. Good deal. Still 14 hours, 20 minutes left in that. I think that's about right at where our promo discount goes from our website. Tools. Oops. There we go. Okay, so our current deal with them is members get a 21-day trial instead of 7 days. So if you click on our link, you get a 21-day free trial and 30% off any plan that you decide to purchase later on, currently with our sign up. So if you just go straight to bullishbears.com and then click sign up now on the tool section here where that TrendSpider discount code is. Or you can use the code right here too. BB dash or underscore T21 underscore D30. And we get lots of other, we've got lots of other partnerships with a lot of different platforms, including Benzinga. And here's our current TradeStation deal. This deal I know we renegotiated here. They used to basically give you a percentage back on your commissions, up to 100% rebate on your Bullish Bears membership fees. So essentially TradeStation used to pay for your Bullish Bears membership over time with commission discounts. Now I think they're doing a little different. They're basically having it where the commissions are reduced rate, so we got to update that, and that's currently being rebuilt on our site to update that. Now I think it's just a huge discount on commissions altogether, and then plus they give you a bigger bonus when you fund an account. So that's one to look at.
Okay, thanks, Jeremy.
And that's just a few of our affiliates. We've got a lot more in the background. These are the major ones. Good deal. All right. Cool, descending channel. And this is also cool. You can actually see it right here on this line. It's a little bit different than mine typically. I usually go right for peaks. But it's close enough to know where the break is. And point of control is going to be first target on this breakout of a descending channel. Look for the push to about 399.75. And if it makes a full 50% retracement, it can go to that $400 bill. It's very possible. I just heard a really loud thud in my house. I think it was a cat.
What, knocking something over?
Yep, very typical. Knocking things down. That is so interesting, dude. I'm dumbfounded at why this happens. My purple wolf wave from days ago on a 2-hour chart right up here. Look at the 1-minute chart.
We're walking it.
We're walking it. It's in the total wrong place, but it's still relevant. I just cannot get over that. That is so funny. Is it a deviation maybe? Got me. And it's not Weeble's not the only software that does that. There's other platforms that have the same skew effect on trend lines from different time frames. I'll roll with it though, man, because it's done me well.
The other interesting thing that came up in that YouTube thing with what financial institutions think of retail traders, he said, "Listen, if the guy's making money, I'm not gonna take away his moment in the sun.
That's right.
If it's working for him, who am I to judge him for that?"
Good way to think about it. So I don't have to care. I just know that if you're doing well, kudos. My hat's off to you, brother.
Good for you, man. Rock and roll.
That's it. All right,
But
remember
the learning those diamond patterns, how to draw that out. I've been noticing that happens mostly on double tops and double bottoms.
yes.
That diamond pattern is a double top or a double bottom.
Very typically, yes. Although,
But it also flattens out at the end. It has that flattening effect, which gives you that diamond.
right, and it's also you get the rule of 3 in there as well. So I mean, that technically makes it a triple top, but the breakover point is typically a double top, yes, on a shorter time frame. So like, let me see if I can remember where that happened with this other diamond here. So like here you had the classic double top, and it took forever to shake down. And if you look, you got the rule of 3. You got 1, 2, 3 attempts on resistance, break over, and 1, 2, 3 attempts on support, break through. So you get the rule of 3 in there as well. But it starts out looking like a nice little M top here.
Yeah.
And oftentimes you'll see them on a bottom too.
So it doesn't matter if it's an M top at the bottom or a W at the top. Sorry, a double top at the bottom or a double bottom at the top. It's still a diamond.
Right. It's still going to have that diamond formation. And there was I've long since deleted the lines from the Jackson Hole event, but man, that thing was just crazy accurate with exactly where those levels are. Oops, here's a rejection right off that control point of control. Let's see if that pulls back and goes bullish, or if we get a bearish measured move out of this. This is leg 1, accumulation. Leg 2 would take us down here to 398.25. And it's going to take me forever to find the Jackson Hole event on a 2-hour chart. I don't remember when the date was. I'll figure it out later.
And broke down below that and then went sideways.
Yeah, it's accumulating here. Oftentimes when you get a descending channel like this with a retrace and then you get a measured move down, this is much more volatile. But this is your first leg, this is your accumulation, this is your second leg. The point of control is kind of shifted here. It's actually at about 399.75, which is where it showed on the TrendSpider chart, and it still shows on the TrendSpider chart at 399.75. There's your accumulation to prove it right there. When you have a point of control and a measured move coming through it, usually we finish the measured move, and then if you were looking at this as a bullish measured move, the pullback would be very similar to this, only it would continue to grind up. In this case, this is setting up for a bearish measured move and the potential for breaking its point of control, which is right down here at 399 exactly. That measured move would take us down to 398.50, or even an extension down to 398.25 for that matter. And the weird thing is you can find that your trend line will usually exceed that from your resistance point, but if it was a narrowing channel towards the base, your support line will actually be a little closer, and especially if you drag it across the point of control, which is right here, to find your measured move price target. And then never forget to put the halfway leg in there, which is about 398.70. I'll draw that as a segment, if it'll let me. Alright, so our hourglass on this KAL is kind of just about complete. So we had range expansion, range contraction here. No, that's no longer an hourglass. That's another flag. Cool. We got a basic trend line right out of the gate. And don't forget the regression line. Man, these stocks trading around 10 cents, 12 cents, whatever, around the dime, they're so easy to predict. And that's what's great about practicing these. And whether you're trading large caps or penny stocks, the price action is the same. It just happens a lot faster on a penny stock. And in comparison, you know, looking at AMD, similar kind of setup, just not as volatile. So where's your point of control? About 75.54. That's just right at the top of this bar. And whether you find points of control as a center point for price, or you find it as just being another pivot, doesn't matter how you got there. You got to the same number, or pretty damn close. But knowing where those points of control are based on control candles, and then knowing where the center point is, usually gives you a pretty good idea. If this is going to turn into an actual double bottom reversal here, and it's sort of setting up, there's your L1, H1, L2. We come back through the 200 period and we break R1 or H1, 74.40, we know that the likely target is going to first be the point of control, and if it continues through the point of control, it'll likely extend this entire range up to the next pivot. And if you look at SPY, it's kind of looking similar. We're getting kind of a double bottom effect here. We know where the key support is down here, and that's just the halfway point for a bearish measured move. And if we set up with liquidity here, this is where the buyers will be waiting. If they're going to reverse this as a double bottom, that's where you're likely to see an entry point. And very similarly, if this is our point of control, it's slightly different on this, but 74.40, ah, dang it, let me draw. So there was your half leg and your full leg, and then there's one more point of interest here. Let's see if I can draw it fast enough. So when you look for a bear target, it's going to be about half the distance from S1 to R1, and it ends up being right at the $74 pivot. It's about half that move, see? So double bottoms aren't always going to be straight across. Oftentimes they'll be skewed in this measured move a way of measuring it. So when we start seeing bulls come in at that extension down here at the $74 pivot, we can begin to look at this as a double bottom. If it breaks that support area, all that does is confirm this to be a bear flag, and then you finish the measured move down to the next point of control. And there's two of them. You got this bar here, and you got this bar here. And all you do is draw some more pivots. Make that chart look even nastier. It's about 73.96. And the extension down here about 73.82. So when you're predicting price targets, that's where you look. You look for what the chart has already shown you. Where's the point of control? Where's the measured move from the point of control? Where's the breakout likely to be? Where's the reversal likely to be? And if you can think as fast as you can draw, you'll do okay. But if you can think faster than you can draw, you'll do even better. And that's like me on a 10-second chart. Before I can even draw it on a 10-second chart, it's already happened. So when I'm trading and I'm looking at these same patterns on a 10-second chart, I don't have time to draw. I just got to know. But all the practice you're going to get trading the larger time frames and knowing where those points of control are and knowing where those targets are, then you'll be getting to that 10-second chart. And it might take a couple years, but repetition, 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 over and over and over again, you're going to see it. And it'll almost feel like price action gets boring to you. That's when you get into the point where you've got this.
Well, Jeremy, I feel like if it's a 5-year program basically, right? You're gonna have trend lines and you're gonna have lines drawn out. You're already gonna have things marked because you're gonna be on a 1 minute if you're even trading that 10-second chart.
Right.
You're gonna have a 1 minute, a 5 minute, and a 2 hour maybe. Depending on your style and such. But the thing is, and Stone and I were talking about this. He's like, I don't even know how to do a 10-second. I'm like, well, let me put it to you this way. I was asking Jeremy about how an evening star looked. He said it rolls over like it's doji and over, and
Right.
and that kind of made it click in Stone's head. And the other thing is, you use them in tandem. So, and
Right.
this is what I'm getting from paying attention, is you use them in tandem. So the 10-second might show what the 1 minute's about to do.
Right.
And you're already going to have your price ladder drawn out on the 1 minute because you've been charting for a while. There's going to be stuff there.
And it won't be 5 years for everyone. There'll be people who
No,
pick it up
no,
and
there's people that
you know.
flatten that curve, but that's
Yeah.
just a generous people overestimate what they can do in 1 year and underestimate what they can do in 5. That's all they do
Exactly.
in control.
Exactly. There's the
But
Bulls.
but the other
right where we knew they'd be.
coming back. But on that 10-second, the way that I see it working is, we were Stone and I were talking about, so Stone, essentially where exhaustion is going to happen. You can ride that.
Right.
You get to ride that exhaustion because you're on the 10-second chart.
That's it, because you're going to know exactly where it is on a 10-second chart, because you're going to be able to see, okay, well, there's a wick on a 1-minute chart. Bulls got exhausted here. Bears started taking over. You look at this on a 10-second chart or even a 5-second chart, because I don't have a 10-second chart on Webull. Let's look way back there. You can see that clean breakover. That price was ready.
Look at that.
Bam.
Mm-hmm.
Right under that 8 period, smoked. All right, this is how you...
That's a huge win right there on a 10-second chart. If you're trading futures on a 10, that's money in the bank.
This is where you nail those 2 and 3 pointers over and over and over again. This was a 3-pointer. And this would be 3 points on the ES chart. And it was just easy prediction, knowing where the reversal is on the 1-minute chart, knowing where the exhaustion was.
Being able to identify that.
Yep. And knowing where the pivot is. So here we are at 10:20 and 10:21. This is on 5-second intervals, so each of these candles is 5 seconds, knowing exactly what caused the top of that wick right here. Bam, there's your breakover, poof, gap down. That simple.
Oh yeah, so simple.
Like I said, once you get that repetition down, you get it to where you can just identify these without even really thinking about it. And you can find those points of control pretty readily. It's going to take you a little while to draw them on a 1 and 5-minute chart, but knowing exactly where to watch for them will help you with the shorter time frames. So like I always say, start with your big time frames and work your way down. You whittle down the price action until you know exactly where all the points of control are on every time frame until you get it down to the last second. Like you start getting into really short time frames. You'll basically take all the knowledge you gain coming down through the time frames and have set points of knowing exactly where those price targets are, so you can trade them on a 1-minute chart, and you literally trade between those price zones that you know are there on a longer term chart. So it just gives you a way to kind of condense everything down to a point and knowing exactly where that point is likely to go next.
Structure within the structure.
Exactly. And here we are. We knew the bulls were going to be there. They failed to push this above the 8 period for a trend reversal. This might end up breaking and becoming a bearish measured move right here. And we know exactly where the bears are going to sell this if this wants to pick up momentum. That's where it's going to be, right there on that pivot. It can still reverse here, but it's looking a little less likely now. Amazon's kind of eking out a little bear flag here on the 1-minute chart. And we know what a failed bear flag typically looks like. But there's one thing that a lot of people miss when it comes to bear flags. It's knowing that sometimes they can fake out. And let's see, there's your point of control. And if you start at a point of control and draw a trend line, the picture starts to build. We love us some megaphone patterns. And they're very much predictable. So you can see what looked like a bear flag. You know where the points of control are. If it's going to confirm a bear flag, it'll reject here. If it fails a bear flag, we'll get a measured move. and basically stack another equal bar above the resistance point and probably target right here at about 94.70.
All right, buddy, I gotta take off. Sorry.
It's all right, man.
All right. Hope you have a great rest of your day. Later,
You
guys.
too.
Have a great day.
Yeah, I've got to take off for an hour, pick the car up for its MOT. Thanks, guys. I'll be back in a bit.
Yeah, no problem. I'm going to probably sign off of YouTube here in a minute and then take a break myself. I'm going to get some breakfast. I've been fasting my breakfast to pretty late in the day now.
That's why they call it breakfast. It's break fast.
There you go.
Breaking your
Break your fast.
It's
I do a
actually
lot of fasting. I don't have breakfast anymore. I just have one meal a day now.
I didn't
The only-
have breakfast
You're
yesterday.
one meal a day? How do you do that?
Yes, it gets easy after a while. And it's
So
so much easier because you don't have to wash up and you just have to think about one meal a day.
That's a good way to do it. And then a lot of times you can kind of snack throughout the day instead of having meals throughout the day. You just have one big meal and then have little snacks here and there to pick me up. That's kind
No,
of
I don't even have snacks. I just literally have one meal a day. But I have like a big meal, it's massive.
Not me. I got snacks.
Yeah, I need a snack. My stomach my stomach starts getting really mad at me if I
Yeah. It's like,
so
feed
does
me
my
before
brain.
I eat you.
I get hangry. Yeah.
Yeah.
Feed me before I punch you.
Yeah.
All right. That's goodbye number 2. Goodbye number 3, and have a great day, guys.
All right, man. We'll see you. I was a little off with that measured move, but it's still stacked up to just eke to 94.60. I called it at 94.70. My scale was off. I didn't measure the height of that candle. Round it. 94.10. 94.33, 34. Didn't quite finish that entire candle size. It came to within a penny of that measured move and broke. So now we're going to test support again. Sometimes you'll get what I used to call a pop and drop bear flag. You'll get accumulation into the bear flag. You'll break above resistance for a measured move and then break over bearish. Again, know where that point of control is. The other thing we have here is a double bottom. We have our bearish trend, which was a bearish measured move trend, came to support. Got this nice descending megaphone pattern. Point of control is right here. There's your L1, R1, L2. We broke R1. We're above this resistance point. We nailed just about to target one, which is the first bar in the trend right here. Just like any other double bottom we've traded. And now we've come back to test support at R1. If we break R1 support, we do get the pop and drop bear flag. We run down. First target, 50% of the rising channel that we have here, which is right inside of this descending megaphone. We got a little rising channel here. That would take us to about 94.10. Extension would be to the regression line. Lines up about 94.02. And if it produces an actual bear flag that breaks, the regression line is where the break happens instead of the angular support. And if you get a regression line break, typically it'll form the previous leg, which gives us almost a whole dollar expected. So we would probably see about $93 print on that for a full leg bearish measured move. Half leg would take us to probably about 50 cents above that, about 93.50. Here's where it's going to happen. It'll tell us whether we're going to get continuation for a bull move and retrace back up to the previous targets in the bear trend, or if we're going to break over and become a bear flag and run down for a bearish measured move right here. Like I said, when price action seems boring, you're going to have a much easier time doing what you do, what you want to do in the market, make money. All right, look at this. Bam. Right in that pivot, dude. 13 cents. Whether you're trading a penny stock or a mega cap, dude, it's all the same price action. Anyway, I'm going to call it good for the YouTube channel, and I'm going to probably break off, have a quick snack here, and maybe come back probably about 11:30. I think we had some economic news coming out at 11:30, didn't we? 12 o'clock, okay. That's that Fed interview with Bullard on Market Watch. Okay. The bill auction at 11:30 is going to be the thing that happens at 11:30, though. So I'll try and get back by then and see if we can get some price action out of that. But if not, we can always come back for Power Hour. Anyway, thanks for joining us on YouTube. Hit that like and subscribe button. Tell your friends. And hit the bell. Get a notification when we come out and do this daily. We'll see you guys tomorrow.